following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN Tuesday morning, 9:06 a.m. We got about 24 minutes to go until the opening bell, and right now you're looking at a negative market. We got rising yields out there, and we have an S&P negative by about 0.8%, negative 34 points. You see the sell-off begins at about 2 a.m. Eastern time. You dive from a price level of 44.40, just above there. You dive 50 points about to 43.90. We're sitting right at about 4,400 in the S&Ps. NASDAQ 100 down almost 1.4%. You see the acceleration. We're bumping up to the lows we had of last Monday. Remarkable when you look at where we were to start Monday trading. You were at 15,400. You end yesterday's session at around 15,200. We have a 14,000 handle right now in the NASDAQ 100. Tech stocks pulling back as we have rising yields. The Dow off about 0.4%. Now, consider where we are. Take a look at these indices going back. S&Ps, you compare it to Monday's action, S&Ps are a solid 107 points above Monday's low right now. NASDAQ 100 within about less than 200. And on a 14,800 point index, that's barely more than 1% away from Monday's lows. Dow's quite a different story. In terms of the Dow, you're talking about 1,100 points off the lows we had on Monday. So you're seeing a diverging action, right? All the markets were selling off last week. We had a lot of Evergrande fear was built into the Monday acceleration. That's what a lot of people would say. But it's kind of living up to that when you have a diverging sell-off today where you only have the Dow down 0.4%, 0.4. Got the NASDAQ down 1.3%. Okay, we got crude accelerating higher, continuing that trend. We're at 75.84. We had a 76 handle earlier this morning. Gold's pulling back, down $15. We've got a little bit of a bid in the last few minutes. We're up to 17.37. We were down about $25. Just as recently as within that 830 bar. And let's jump to notes and bonds because there's the action, folks. We got the 10-year right now down about 10 ticks. And we have the 30-year I'm going to jump to as well because we get the 30-year yield jumping up to a price point of 2.08%, I believe it is on the 30-year. The 30-year is down a full point and 7 ticks. You take a look at the drop we've had recently since the 23rd of September. You were trading at 164.15. We've lost 5 full points over 4 trading days in that 30-year. You jump to the 10-year, sell-off as well. But, man, you're talking about 133.04, 131.14. Now, putting this on a 5-year daily, we're looking at the 10-year again. I'm going to go back to the lows we had in October of 2018. We drive up to 140.24. That is the spike high during COVID. That's March of 2020. We make a spike high, you could say, at 140.24, but we last and kind of consolidate up near those highs. That's when yields were correlating to about 0.5%. We've now come back to the same level that we were at in April. I'm going to zoom in now so you can compare where we are now, where we were in April. And you're talking about the price levels in April we had, the exact lows that we were dealing with that would correlate to a higher yield. You're talking about lows of 130.26. Is that the same on April 5th? 130.26. Yes, 130.26 is the low there. So you're within a full point of that price level at 131.15 today. We'll see where we go from there. Interesting action as we kick off Tuesday's trading. NASDAQ down 205. Correlating some of the runs we've had, folks, still, you take a look at the NASDAQ 100, right? We might as well be sitting right near all-time highs. You could say that we could be rolling over a little bit there, though. Still pretty well-defined in the up channel, all things considered. Remember, folks, less than a year and a half ago, the NASDAQ 100 was trading at a price point of 6,600. You go back to the peak prior to COVID, and we didn't even have 10,000. Okay, so, you talk about February of last year. We're trading under 10,000 in the tech stocks, let alone you come into 2020 at about 8,800. and we're still sitting at about 15,000 right now. Correlating, though, you check it out where we're going. That low coming back from last Monday, you're talking about a low of 14,807, right above the lows we had on August 19th. That low, 14,710. So 14,700, 14,800. Next up below that, you'd be looking at 14,445. All right, let's get into some of the headlines this morning as we kick off trading. And there is your headline. NASDAQ futures dropped by 1.5%. as surging bond yields cause investors to flee tech stocks. Can't argue with the logic when you're seeing the divergence, which is why I walked you through it. We're talking about a yield in the 10-year, about 1.55%. As I mentioned, even the 30-year has also been moving, topping 2%, topping it in a big way. It's up 8 basis points at 2.08% on the 30-year. Let's jump around to some of those FANG stocks, see how they're moving this morning. You got Amazon down about $50. We're going to zoom in. Now, look at Amazon in consolidation, right? Bumped up against that upper boundary line yet again at about 3,500. You're now going to open at about 3,350. The lower boundary line is about 3,000 on this equity. Taking a look at this morning's action on a 15-minute, you closed at about 3,400. You're at 3,357. You got Microsoft and Apple trading lower this morning as well. Microsoft down about $4 to $290. Apple shares, always remarkable. I talk about it often, but Apple's got 16.5 billion shares. You're down $2 plus today. So you're talking about $34 billion in market capitalization wiped off this company just since the close of action yesterday. You see, though, catching a little bit of a bid. Was down to 142. Maybe that's a real tick. Maybe it's just a little bit of an outlier, up to 143.23. We'll jump to Tesla shares. Tesla trading low to about 784. Facebook shares down a bit as well, and we'll finish it up with Google. Google trading lower. What else? What else? Any other tech stocks? I had one in my head, but I can't come to mind. It will. All right, let's jump back to what else we have in terms of stocks that are making moves. We'll jump down the line of some of the equities. We'll start off with Ford. $11 billion they're going to spend on a project. They're going to build a new U.S. assembly plant and 3 battery factories as they accelerate the push into electric vehicles. They're teaming up with their South Korean partner, SK Innovation. The market liking that this morning. One of the few highlights to the upside. You got Ford trading up to about $14.60. Quite a run it's had recently from $12.66. That's just 5 days. Let's take a look at the daily. Yeah, quite a pop here. You're bumping up to this area that you were in the early part of August. You have a recent high in Ford of 16.45. You're going to open today at about 14.60. The high, you go back to July 29th, the high of 14.79. I believe that was the day after earnings. Yes. And we had about 111 million shares traded that day. And you're going to bump up into that high on the open this morning. Thor Industries, recreational vehicle maker, they beat in a big way. 412 versus a 292. Demand for RVs remains strong with backlogs at record highs. Really remarkable just across the board how many industries are experiencing highs or lows depending on where you are in this pandemic. But there you see the pop on their numbers, up to about 116. RV vehicles still trying to deal with the demand that they can't catch up to. AMAT's a little bit lower after they get a downgrade to neutral from buy, noting record valuation, limited upside for the maker of semiconductor manufacturing equipment. Yeah, you know, Dave White talks about this sometimes with some of those chip makers in terms of they've already sold basically everything they had. Now, they make the equipment. I'm not, you know, you should check out his program, show folks at 2 o'clock every day to get a real feel for it. But, you know, he talks about whether it's the NVIDIAs or so forth in terms of sometimes it's so tough where they basically can sell everything that they make already. So how do you improve from that? It's kind of double-edged sword, but nonetheless, you got AMAT trading a little bit lower down to 137 from 142 and chopping around in that area since about April. All right, folks, stay tuned. We're getting a little bit of a bid lift. S&P is down 28. We'll be coming back with Kevin Hincks from TD Ameritrade Network. Stay tuned.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. Jumping over to that crude contract, $76.07 right now. You see the rebound we had. We had lows going back to late August. You were at a price point of $61.74 and $61.82. Right now, we're trading at $76.06. We had a high this morning already, pulling that up $76.67. You're talking about a recent high of $76.98. A lot of talk out there today about $100 oil. Teddy Kegstad, we talked to him tomorrow at 40 past the hour from forex-trading-unlock.com. He does some great work on Forex. Crude, a big part of some of those currencies in terms of commodities, how they drive some of the currency action. Teddy's been talking about $100 crude for a while now. Be interesting to get his take tomorrow, 40 past the hour. We talk to Teddy every Wednesday. Jumping back to the market, jumping down the line in terms of what we have going on today, we have Chairman Powell. There we go. He will be speaking to, the Senate Banking Committee. His remarks already out there cautioning lawmakers that the causes of recent rise in inflation may last longer than anticipated. Hang on to that one, folks, because that may be part of the reason you're seeing some of those yields as the market is catching up to the idea that this may persist a little bit longer than we thought. But Chairman Powell still able to argue transitory. Where you fall on that one, they could be contradictory. Nonetheless, the remarks are part of mandated testimony that he's going to give to Congress regarding the Fed's economic response to the COVID pandemic. He goes before the House on Thursday, and he's part of some type of panel, I believe, with European bankers as well tomorrow. So we get Chairman Powell Tuesday, Wednesday, and Thursday, and we get him 3 days in the week at a time when we got yields spiking in a big way. Taking a look at that 10-year, as I talked about, I mean, we are basically below that level right now in terms of the consolidation that we had when we had lower yields. We're above 1.5%, and we're bumping up to the lower boundary line. The lows on price on the 10-year, 130.25. All right, folks, let's jump over to our man Kevin Hincks every trading day at 11 a.m. Eastern Time, fast market on the TD Ameritrade Network. Kevin Hincks, Alex Coffey, and the team walking you through the day's market action, setting up hypothetical trades, talking about defined risk in that option market. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yeah, another interesting day setting up here. The NASDAQ is already off its lows here, so we're watching as the rotation continues. Is this a rotation or is this a market sell-off? It still looks to me, Tommy, like it's rotation out of NASDAQ into financial, industrials, all those things like that. So kind of like yesterday, but, the NASDAQ was down. Man, it was down almost 1.6%. Now it's down 1.2. So we've already got a little bounce here before the market even opens. So interesting. A lot of economic data this morning. None of it top here, as you know. But at 9 o'clock, we'll get 9 o'clock Chicago, 10 o'clock Eastern, we'll get consumer confidence. That'll be a pretty big number. So that's one we'll be watching for it at 10 o'clock Eastern. But so far, this is just a market that's choppy, Tommy. Nothing really more important than that.
It's pretty cool, Kevin. And I was going to bring it up in terms of rotation. We have a little bit of a divergence. You had the sell-off last week, right? In terms of a lot of people talking about Evergrande, and maybe that was the angst in the market from Friday to the real acceleration on Monday, where we saw markets down 1 to 2 to almost 3% in the NASDAQ 100. You pull up the chart on the Thinkorswim platform, we get the NASDAQ 100 up here. We're trading at about 15,000. The lows last Monday, 14,800. So you're pretty close to those lows. You pull up the Dow, and we're at 34,600. The lows, 33,400. You're 1,200 points, Kevin, above where we were, basically almost right near the upper boundary line. Quite a divergence there, as you have seen that pullback. And we got yields that we haven't seen in a little while. I was just talking about it before we came to you, bumping up, lower price on that 10-year, the 30-year as well. But that 10-year bumping up, basically, hitting the lows that we had, whether we were talking about from where we were in basically March all the way through July. And we got Chairman Powell, 3 days coming, Tuesday, Wednesday, and Thursday this week, as the market might look for a little bit of inflation and the 30-year rising as well. What do you think about that 30-year rising as well?
There is a point where a higher yield on the 10-year note and 30-year bond will affect stock prices in terms of competition for yield. But just like I said on TD Ameritrade a few moments ago, it's not 1.5. That's not the level. So I get it where, because it's been 1.3 and 1.2, that this looks alarming. But this is nothing that should scare people out of stocks just yet. Now, if it continues to go up, that'll make the market choppy. But 1.5 doesn't really scare me yet, Tommy. So, and I think 1.5, 1.6 brings in a lot of order flow in terms of foreign buyers, in terms of people starting to look for alternative investments. So I'm going to watch, how much attention 1.5% 10-year brings into the market, Tommy.
Because it is cool that's kind of where the market got comfy for the better part of the beginning of this year. 1.5, a nice little round number, not quite up to 2%, which might be a little bit more fear in terms of rising yields, hurting some of those stocks as you're talking about. And just like that, we're right back to that level right now. We got some action this morning. You got Ford moving this morning, Kevin. They're going to be getting into electric vehicles with $11 billion with their partner in South Korea, building some plants in the U.S. What are you looking at in the market today, Kevin, coming up at 11 o'clock today?
Well, I know right now that Folio is going to be talking about social media companies, so we're going to have a good discussion on that. Remember, we're in that kind of that chasm right now between the end of earnings season and the beginning of next earnings season. So right now we're looking at social media. So we'll be doing all things social media today, like Pinterest and Snapchat and Facebook. We'll be looking at all those today, Tommy.
Facebook. I was hoping you were going to say Facebook. I'll be looking forward to the program, Kevin. I want to see what they when they talk about sentiment, right? Like Folio, they love talking about the sentiment. I was talking about the story yesterday that Facebook putting a hold on the Instagram for children application. I think Facebook has a little bit of a problem in terms of sentiment. My sentiment, not too great, but man, they keep printing money. But it's interesting. So there's been some tough articles for them out the last week or two, even talking about internal data and so forth. So we look forward to that discussion, Kevin. We got Facebook right now. We'll pull it up, trading down about $5 from $3.53 to $3.48. Well, Kevin, we look forward to the program as always, man. We appreciate you coming on, giving us the education you do, and we'll be watching at 11 o'clock today.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure, Kevin. Take care. Folks, tune in 11 o'clock today. You heard it. They'll be talking social media. And it is amazing that we are at almost the end of the quarter. That's why you're seeing this trail off in earnings a bit. October 1st, Friday. October 1st, Friday. My goodness. But yeah, the new quarter begins October 1st. And a couple weeks after that, you will kick things off with the banks. And that is a perfect transition because with rising yields, we jump over to the banks. One of the few sectors that you'll see positive today, we got Bank of America right now. Now, all of these have caught quite a bid over the last week as we've seen those yields jump dramatically. Bank of America right now, you're up another 10 pennies right now at 43.37. We jumped to JP Morgan. Same thing, up a hair, up about 10 cents or so. A lot of these stocks, I mean, you just had JP Morgan. That's just 5 days. Let's see where we were going back 10 days. From 150 to 167. You don't often see bank stocks jump 10, 11, 12% over the period of 1 week. But man, when you got yields rocking like we do, that is possible. Stay tuned, folks. We'll be coming back for the market open. Give us a call, 877-927-6648. We'll be right back in 3 minutes.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We get the S&Ps right at about 4,400. You're down 30 points. NASDAQ 100, you're at 15,012. As Kevin said, the bounce doesn't look too magnificent compared to the fall off we had. But you look at a point basis, we were down there at 14,925. You're up almost 100 points since about 7 a.m. this morning. Do we get a buy in the dip? We will find out. You get the Dow off just 91 points, 34,649. Jumping around to some of the other stories I have up here, we're going to jump to back to China and Evergrande a little bit. China's housing bubble puts all other housing bubbles to shame. Evergrande is just a symptom of far deeper problems. This is an opinion article out here last night over at Bloomberg, okay? Opinion article, always important to differentiate opinion versus when they're just doing news, because they're adding their opinions in here, folks, talking about why. But, man, I wanted to pull up one chart in particular. Well, let's just tease how they go into this. If you're a New Zealander, Canadian, or American, you might think your housing market's wild, and it is, but the sheer deadly froth, nothing matches China. Real estate makes up nearly 30% of GDP, compared with 19% of the U.S., okay? But you got to look at the trend it's had. Worse, housing makes up 78% of Chinese assets, compared with 35% in the U.S. If you get a steep sell-off when it's representing 80% of assets in China, okay, now the reason why it's 80% of assets is probably because, look at this chart. The blue in here in China, this is the impact on GDP of activities related to real estate as a percentage. You go back to 1997, and real estate in China as a percentage of their GDP, okay, related to real estate, 8.5%. I mean, this blue line just goes through the roof, or up to 30%. In 2014, and we've been sputtering a little bit as you look where we go from there. The last data point on this chart we have for China is 28.7%. Nonetheless, you see how that could reverberate well beyond Evergrande in terms of if that market really collapses. Now, you want to get into something a little bit frothy. How about the fact that there are an estimated 90 million China empty apartments? Empty apartments in China, 90 million. The way Bloomberg looks to visualize that on this chart is that it could fit everybody in Canada, Italy, the UK, and Germany in the empty apartments they have. It's not as big when you think China's got 1 billion people. But, man, 90 million. The U.S. total population is like 330 million. That would be just empty apartments for 1 out of every 4 people sitting around the country. So keep that in mind when you see all this talked about in terms of where that could go. Those are the two charts. Staggering stuff in terms of how much of a percentage they make up. And there's probably a reason why it makes up 30%, because they've been building basically ghost everything in terms of where they are on that spectrum of real estate. And we jump to Evergrande from there. Bond bills are piling up as latest coupon comes due. 45.2 million due tomorrow. You get that 45 million you owe me? 45 million due tomorrow. As another note, and that's a dollar bond maturing in 2024. That's a 30-day grace period. I imagine they'll have something come out. They'll take care of that as well. They've made no public statements on an 83.5 million coupon that was due September 23rd, and at least several holders have said they didn't receive payment. A lot of murky stuff going on in China, and I would just keep my spikes up on my back there with those types of numbers that you'll be dealing with. All right, let's jump down the line and see what else we got going on. We'll jump to crude. You're talking about Brent at a near 3-year high. We talked about light sweet. Let's pull it up. We're at 76.17. I'm going to take a look at a 5-year weekly, and that's what we're talking about. You see where we're at. We're actually right at that level. You correlate to where we were back in October. This is a weekly chart. So beginning of October of 18, you had a high of 76.90. Right? We just eclipsed that price back in July, 76.98. We're trading at 76.23. You go below back to that. Let's see how far back this goes. I mean, next high you're talking about is $100. You see the straight shot, right? We get over where we were in 2018, and you're just trading right into the acceleration we had when it fell out of bed towards the end of 2014. $100 crude. Definitely possible when you look at this chart. If we break above this area, zooming back in on the action, though, that's going to be an area that we have some resistance that we traded into at the end of 2018. But all things seem to point to higher prices. Crude maybe one of the most fascinating trades coming out of the pandemic. I have $6.50 on this chart back in April of 2020. But if you were around in the market then, you remember that the actual contract expiring at that time, negative $37, I think, was it negative $42 per a barrel? You actually, the world found out pretty quickly that futures contracts actually could expire below $0. Not a lot of people knew that. That's where, study what you know, folks. If you're trading futures to that degree, and you're trading light sweet crude futures to that degree, you made a mistake by not realizing they could go negative. Because, man, what a turnaround. Folks, I mean, look at this. I got monthlies up here. We got how many bars going all the way back to last March? 2 negative bars here, 1 negative bar. So we got 4 monthly negative bars. And most of the bars to the upside, pretty dramatic rises on a monthly basis. You're talking about $8 bars in terms of a single month. You're talking about a $12 bar in February to the upside. You're talking about a $13 bar when we had a $33 low. That's like a 33% rise in the price of crude last November. Now remember, that's when we got efficacy data for the vaccines. That's when the world figured out the economy should get back to business at some point in time, and we will find out. Other news out there, we got Pfizer. I believe they put in for a bid to have their vaccine approved from 5 to 12 years old. They are down with the market this morning, down to 42.79. All the markets catching a little bit of a sell-off right now on the open. We'll jump back to the S&P. You're down near that lower boundary line again, 43.95. Lows pre-market in the S&Ps, 43.88, so about 7 points away. NASDAQ 100, 14,965. We're only about 40 points away from that. And the Dow, negative 123 right now. Okay, jumping around to what else we got going on. Specific stocks making moves. No real reaction. No real action. Excuse me. There's some stuff here. Merck's gonna near their deal to buy drug maker Acceleron Pharma. That was talked about in previous days. Sanofi has positive results from its study on its own mRNA-based COVID vaccine, and there is the Pfizer that. No, that's one talking about the flu. Yeah, but there is. Pfizer submitted study data to the FDA on its use of COVID vaccine, children 5 to 11, with a formal emergency use authorization submission expected in the coming weeks. Okay, so they submitted the data and the official submission for emergency use coming in the next couple weeks for Pfizer. But yeah, no real huge specific moves in terms of equities with earnings. I'm going to jump around to a couple stories I had queued up here. First one's going to talk about cars. Cars on American roads, older and older. Interesting here, 12.1 years. The average age of a car in 2021, the average age had been 11.9 in 2020. In 2002, that number was just 9.6. There was a time when drivers didn't expect 100,000 miles. Now they're getting 200,000. If you own a Toyota Land Cruiser, you got a better than 1 out of 8 chance. Almost, what is that, 1 out of 6? 1 out of 6, a little bit better than that. Chance that that car has at least 200,000 miles on it. Toyota Land Cruiser, man. They should make commercials out of that one, that statistic. 16% of them got 200,000 miles or more. Stay tuned, folks. We're going over what other equities we have with action today. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. I got a chart of the S&P up here. S&P is negative 35 points right now, 43.97. I have a full run up here, basically going back to January of 2020. The market had been on quite an uptrend coming into the COVID-19 pandemic. We fall from a price point of about 3,400 down to 2,207, I believe. What's our low there on the futures? Come on, 2174. Before accelerating higher, and we're still basically in that uptrend channel at 43.95. Now, what's interesting is, I don't know how this happened, but it's interesting to check out. I pull up CNBC this morning, just checking out some of the numbers, checking out some of the news stories, specific equities. Somehow, folks, I don't know how it happened, and I think it was a glitch on CNBC's part. I couldn't replicate it on my phone to find out for sure, but it loads this page, CNBC.com, right? It's up there. That's how I pull it up. Long story short, this looks to be the page from February 14th of 2020. All right, maybe I got some cache going on in my computer or some cookies, but I think it was on CNBC's part somehow, because if I pull up CNBC now, it goes back to the regular page. I still have this up from previous. And what's so interesting is taking a glimpse at some of the headlines that were up from that day. So I pulled this up at first and I said, what is going on here? State Department will evacuate Americans from cruise ships. First death confirmed in Europe. I mean, it's amazing that this is the article that get the day that gets pulled up. Okay, now it's just an amazing reminder in terms of what was going on here and how nobody was pricing in the risk to a market that was sitting at basically all-time highs. And the one I wanted to jump to, all right, so I mean, look at these headlines that showed up here from February 2020. Health officials are going to check patients with flu-like symptoms of coronavirus, right? We're going back in time. Good old Michael Avenatti, he was found guilty in that Nike extortion trial. Victoria's Secret was just in talks to sell to Sycamore Partners. I believe that deal got done and then got rescinded during COVID. The one that caught my eye, though, 20% of S&P 500 companies have already warned investors about the virus impact. You jump over to that article, the best part about that bad page they have up there is that all the links work in some capacity. You can see that they're kind of cut off. It's broken. Something was going on here. Just really interesting. And you see these, the reason why I know it's that day in terms of the front page, because these articles are all dated February 14th. At that time, 1 out of 5 companies were already saying, and it was initially that they had the exposure to China. Now, to back you up to where we were at this time, nobody had practically not a single death had occurred in Europe. So it's understandable why this didn't seem like it was real in that capacity. But this should have been a wake-up to a lot of people, and it took about a week. Okay, so February 14th we're looking at, all right? The rollover, I shouldn't even say the rollover, the collapse begins at about February 20th, all right? Market bottoms out by March 20th or 23rd. My birthday is March 20th, and I say that because March 16th, 17th, 18th, it's very memorable for me when Florida, that is when things really shut down. Kids, schools, canceled. Things really clamped down about middle of March across the board. The market is forward-looking, folks. The market fell out of bed about February 20th, okay? When they realized 2 to 3 to 4 weeks out that this was probably going to happen, all the companies were talking about it. But the point being, all right, if you just go back, February 14th on this chart, folks, when we had 1 out of 5 companies already talking about where we were going to be, you had the market at 33.75. There was ample time to be getting out or at least placing some hedges in some capacity. So when you read this article, just shy of 20% warned about the effects, according to analysts, and more than 180 earnings transcripts and releases. I mean, they got a list of the companies down here. It's a lot of big ones. Of course, some of the ones focused in China in particular. You got the cruise ships in here, Las Vegas Sands, Royal Caribbean, right? Starbucks big in China over there as well, along with many others. But it's just a little bit of a wake up in terms of a lesson in a previous time, because it's remarkable to see that type of warning. 1 out of 5 companies saying, hey, guess what? This is going to impact us. And the market had not began to pay attention to that yet. It took about 1 more week. And then, man, when it paid attention, everybody paid attention in terms of what was probably coming down the line. All right, jumping back to this market. So much for buying the dip. All the markets accelerating lower. We got the S&Ps right now down 1.1%. You're down 47 points. You have the NASDAQ 100 approaching 1.8%. Now, we're going to be bumping up against where we were last Friday. You zoom in on that action, 14,807. We're about 100 points away. But, man, we were only down there for about an hour on late Monday afternoon before we got that acceleration higher. So we'll see how the market reacts when we come down to there. Dow, different story. We're still about 1,100 points off the lows we had on Monday, and the Russell down 22 points. But again, much a different story. Monday's action, not the same as today, folks, all right? Monday's had to do with Evergrande. Today's has to do with rising yields. And you're seeing it with the divergence between the NASDAQ 100 and look at the sell-off. We just made a low in the 10-year. No wonder. We got rising yields across the board. Look at that 30-year. Down a full point and 24 ticks right now, 158.30. Folks, on Wednesday, we were just trading at 164 and change. You lost 6 full points on the 30-year. And let's check out the VIX as this market accelerates. We got a VIX of 2134 with rising premiums, which makes sense in a big way. All right, so that's the crazy wrong CNBC articles. Not sure how that happened, but interesting to go back in time to February 14th of 2020. Talk about a different time. Jumping back to the current situation. Maybe this is a little bit of angst playing into the market. I don't think it is, but it's amazing how many variables we have in play. There was a time, folks, when this charade going on in Washington would really spook the markets. Not sure that's what's happening right now, but nonetheless, you have Senate Republicans blocking a House-passed bill that will prevent a federal government shutdown, a potential default on U.S. debt. Lawmakers need to pass an appropriations bill by Thursday to avoid a shutdown. I believe I saw a headline out here talking about maybe October 18th. It would be the day that they might be able to shift around some of the money on the books to avoid that shutdown. Listen, it's very unfortunate that this is how it's getting run in Washington. No matter who is in power, the minority party seems to be trying to always use the debt limit, okay, for their ability to negotiate and as a bargaining chip. Folks, it makes no sense. If you want to see the quickest way to send our country into a spiral, try not paying our bills at a time when we got the 10-year sitting at 1.55% even today. We will never see a yield of 1.55% today if the market really thinks that we're not going to pay our bills that we already spent. I mean, you and I hold U.S. government bonds. The government doesn't pay them. This isn't just like paying your bills. This is literally paying the money that you owe. I don't get it. I don't get how it's excused on both parties. As much as the divisiveness is accelerated over the last 4 years of the Trump presidency, they were able to get things done. I hope they get it done on this one as well, because this one makes zero sense if you care about the country. I mean, you're basically playing chicken with the faith and credibility of the U.S. government. I don't know how any voter wants anybody bargaining by using the faith and credit of the U.S. government as their torpedo bargaining chip that they have the power to torpedo. It's almost like, I got a grenade, I'll blow up the whole house if you don't give me what we want, because that's what we're talking about here. And that's not exaggerating, folks. If you just, if they got their way and didn't pay the bills, it would be a grenade blowing up the whole house. Because I don't think anybody could imagine what would happen if Congress just got together and said, you know what, we got too much debt. We're just going to default because we don't want to spend more money than we've already spent. So we're not going to spend more money and we're just going to default. That's garbage, folks. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We at the S&P's down 52, NASDAQ 100 down 1.7%. A little bit of strength compared to the index. You only have Apple down about 0.6%. Look at that bid that Apple got just since about 9 a.m. from 142 to 144.47. You're down only 90 cents net right now. Google shares down 2.6%, accelerating low in a big way. We jump to Microsoft shares. Whoops, MSFT. Down about 1.9%. Facebook shares right now down 2.6%. You heard Kevin Hincks coming up at 11 o'clock. They're going to be talking social media, all the social media companies right now. Growth companies getting pulled back in a big way. Snapchat down 4% over there. Let's see how Twitter's trading. Twitter down 3%. As you may imagine, on a day where growth stocks, tech stocks getting hurt in a big way. Let's jump down to commodities. Gold down about $19 at $17.32. You got silver down 38 cents at $22.30. And notes and bonds, the sell-off continuing, folks. We just made, these are 30-minute bars. Let's put it back to a 5-minute bar to see the action that we had. You make a low of 131.07 in the last 10 minutes or so, breaking below any area we were at in that 10-year coming into that price point. As Basil Chapman says, folks, he's coming up next. The day is young. We're only 25 minutes into the trading day, and we got the NASDAQ 100 down 1.78%. And again, taking a look at where we were on last Monday, about 100 points from that price level. Dow with some strength today. The airlines had a big day yesterday and positive today. Delta up 0.2%. United right now flat. Boeing shares down 1.4% with it domestically. Southwest up about 0.3%. We'll jump to JetBlue shares right now, trading higher as well. Let's finish it off with the banks on a day when the yields are rocking. JP Morgan up about 0.5% over there. Bank of America shares up 0.8%. Wells Fargo shares, not quite the same story. Wells Fargo always dealing with some woes. They got a downgrade this morning from Morgan Stanley. I chuckle because they're in some pain. Citi up by about 0.25% today. All right, folks, it should be an interesting one in the market. We got Chairman Powell with Yellen. I believe they're talking right now. That's where that October date came, that they'll have money for the government. You may see some headlines. We'll see. Either way, the market making headlines to negative territory. Thanks so much for starting your day with me, folks. Stay tuned. Basil's up right now. Fast Market at 11 o'clock. Larry Pesavento at noon. Steve Rhodes, Dave White, Tom O'Brien, all this afternoon. Stay tuned, folks. We'll be right back. Have a great Tuesday.
Building wealth trading in the stock market seems impossible.